We are back here today. Hello everybody, we are back. Today is Monday, March 3rd. Beautiful day. We're gonna make it a beautiful day. Today we're talking next level. What does it mean next level? I know you guys are very comfortable out there. 9 to 5 jobs, I can appreciate it. You gotta pay the bills, okay? Absolutely. But you know, my job is to take it to the next level. Let's talk about it, okay? When I talk next level, I'm talking about multifamily versus other assets. It could be anything, not just assets. So multifamily versus other assets.
Type in the pin for people to call in later.
Guys, you have crypto,
To call in.
mutual fund, you have stocks, you have CDs, okay? And you also have, the list goes on. You have retail, industrial, office, hotel, Airbnb, vacant lot. Let's analyze what's going on here. So, you know, when we talk next level, everybody knows about crypto, everybody knows about mutual funds, stock, CD. You know, you buy a CD, you put your money, you get 5%, you have peace of mind. 5% of my money, 6%, why not? It's great. It's not going to take you to the next level. It's not going to take you to the lifestyle that you want to be at. Same thing with the stocks. You know, yeah, you throw some money into the stock market and you hope that some gentleman, some advisor, Merrill Lynch advisor, or any of those big houses, Charles Schwab's, okay, will make you go up, make it go up. Yeah, it will go up 8% a year, 9% a year, 7% a year, and that's okay. You know what? There's nothing wrong with making 5% to 8% on your money per year. But it's not taken to the next level. Same thing with mutual fund. Crypto, forget about crypto. That's very risky. Because you don't know what you're doing, you're just gonna go up, you're just gonna buy it because it's going up. Guys, crypto can go down too, okay? So we don't like to buy based on a tip. We buy because of probability and because we are doing our homework. And then when it comes to real estate, you know, the real estate is very complex. There's so many things to talk about when it comes to real estate. You have retail, strip centers. Okay, it can be triple net, one strip center, Walgreen for that matter. Walgreen, CVS. And you know what? There's nothing wrong with that. 6%, 7% will not take you to the next level. Yeah, go pick up a check every month for 5% on your money, 6% on your money. Might as well put in a CD. You don't do real estate to make 5% a year or 6% a year. That's for institutional. That's for real estate institutional. We are here. We want to go for next level. We want to grow. We want to have a better lifestyle. So I'm getting phone call about, hey, I own industrial, I'm making money. Sure, you're making money in industrial. But you know, it's same thing over and over again because you tapped. What does it mean? 6%, 7% a year, that's it. And if that person leave, good luck replacing that person because if it's a big bay, it's going to be difficult to replace that person. Offices, hotel, the list goes on and on, Airbnb, vacant lot, forget about that because that you really have to have enough money in escrow to pay the mortgage every month. Single family homes, okay. Here's the bottom line. Those are all great. The retail, the industrial, the office, the hotel, it's Airbnb, it's all great, but it's not going to take you to the next level. It's not going to give you the lifestyle you deserve. What am I talking about? I'm talking about comfortable life. You want to go on vacation. You want to buy fancy homes. You want to have luxury cars. You want to be comfortable in your life. Do you want to answer to a boss 9 to 5, 9 o'clock? It's 9:01. You're not here. Where are you? It's 5 o'clock. You get out of the office. How many times the guy tell you, your boss, I need to stay a little bit later? So you know what? We are very comfortable, okay, with 9 to 5, and there's nothing wrong with that. Pay the bills. But I want you guys to have my job is to open up your mind and to have a vision. It's a mindset, okay? Guys, it's a mindset. Real estate, mindset. If you want to go to the next level. So why multifamily, okay? Why? Sorry. Why apartments? Why apartments? I'll tell you why apartments. Because rent goes up. Rent goes up every single year. What does it mean? So if I'm charging right now, if I have one bedroom, okay? One bedroom, and I'm charging right now for one bedroom, let's say $1,200 a month, okay? If I play it smart, and if I have a good manager, okay, and if I maintain the property, we're gonna put examples there too. That's $1,200, okay, can easily go next year to $1,300. Now, when you have retail, for that matter, let's say retail is the $1,200 lease a month, retail, right? Per month, okay? That's one bay, yes? Usually, that $1,200, you give them a five-year lease with a small increase every single year, and sometimes there's no increase, sometimes it's flat. So that 5 years, 1 to 5 years, there's no value. You're not gaining value. I'm all about value add. That's what we call it next level. Now, I want to show you guys, okay, an example. We're looking right now at the deal, okay, how you can make a quick $8 to $10 million. Joey, we have a deal in North Florida, okay?
Right.
North Florida. Some 250 units. Asking price, 24 million. How much that per door, Joey?
I think 96.
96 a door.
96,000.
96 per door. All right. Per door. We have a property, place called Tallahassee, 250 unit, 96 a door, okay? So we are paying 24 million. We're going to have a closing cost about, rule of thumb, 2%, 2 to 3%. Call it $900,000, okay? Okay, closing cost, okay? Plus another $2 million capex. Now, when I mean capex, capital improvement to the property. So $2 million divided by 250 is how much?
2 million by 250.
It's about 8,000 a door. Right?
8,000, yep. On the money.
I'm good.
On the money. You're good.
8,000 per door for renovation. That's average, okay? So now, so again, 250 units, 250 units. We are paying 24 million, plus closing costs called $1 million, plus $2 million for capex. We paying how much? 27 million. Now, the average rent right now on this property is $1,000, okay? $1,000 average rent. So, and I'm paying 96 a door, okay? The 1% rule, I'm in the money. I can pay up to $100,000 for this property, okay? So we're gonna go over here now. Now the exit. If I have $1,000 average rent, okay, and I'm gonna go to $1,200 average rent, okay? $200 times 250, how much, Joey?
It's 50 grand.
Per month. I'm sorry,
Per
50
month.
grand?
Yeah.
Per year, how much?
That's 600K.
600K, very nice. $600,000, okay, upside, okay, in rent. Minus a 5% vacancy, call it 500,000, okay? Joey?
95%?
No, it's a $500,000 upside, okay?
Okay.
$500,000 in a 5.5 cap sell price. What is that?
5.5 cap?
Yeah. 500 divided by 5.5?
That's 9 million.
That's your upside, okay? So you got $9 million upside, okay? Now, I like 10 unit, 20 unit. It's simple, it's clean, not too much down. I can't find them. Joey, I want to get some example. I want to show folks, okay, example of 10 unit, 20 unit, okay? Why we can't make money?
Going back to that example, Eyal, you know, with the $9 million profit.
Right.
What's your typical timeline for an investor
So
to achieve a $9 million
Very good.
profit.
So over here, with the $25 million, right? $24 million purchase price. Let's go back to thank you, Joy. 24 plus 1 million plus 2 million, okay?
It's all in 27.
All in 27 million. We need about 25% of that, which is what?
27 times 25%, 6.75.
6.75, call it 30%, just conservative. How much is that?
30%, 27 million.
Seven, seven and a half?
8.1.
8.1, call it $8 million, okay? $8 million. We need $8 million to execute this business model and to be able to close on the deal. This $8 million is going to bring me back $16 million, double the money. They use 2x. 2x. Or call it 50% on your money. The reason why it's not 100% on your money because it takes 2 years.
And that's the power of leverage.
Power of leverage, you got 2 years, max, 16 to 18 months. Listen, guys, I'm greedy son of the beach, okay? I'm not going to be in a deal more than 2 years max. I need to either I get my money back. I don't mind to stay in the deal, but I want to get my money back in a refi event or sell it. So there is your, so the 2x, there is about $8 million profit. $8 million profit, 8 to 9. Now, profit. Now, Joey, I'm trying to explain to the audience, okay? 20 unit, 10 unit, okay? The problem with 10 unit, you can achieve this kind of result, okay? Now, is that bad? No. You start small. Start with a 10 unit to build up 20 units, 20 to 40, so forth, so forth, okay? But the mindset always going to be, I want to grow. I want to get
To the next level.
the next level. How do I get to the next level? Now with 10 unit, now with 20 unit. I need 200 units, 300 units. It's not overnight. This is not, but guys, nothing here is overnight. If someone tells you it's overnight, they're telling you BS story, they're lying to you. It's a goal that you're going to achieve. You're going to climb the ladder. Climb the ladder. Let's give an example for the audience, please.
Sure. You want to look at a small deal?
Small deal.
Okay, let's look again. Because you don't like any of these small deals I ever give you. All those last
What's that?
shows, like all the last shows that we've done, I give you a
Right.
small deal, and you're like, no good, too expensive. You want to offer 50 cents on the dollar, so maybe you want to tell them again why you're going to offer less than what they're marketing it for. And also, what's the expectation? Like you're saying, you can't
Right.
double your money on a lot of these
The
properties.
problem with the small deal, you're going to work very hard for 10 unit that at the end of the day, maybe you're going to end up making about 15% on your money, maybe 16%, if you buy it right. Joey, give me a deal right now.
Sure. I'm gonna look maybe in the Northeast.
Northeast.
We'll try New Jersey.
New Jersey, we love New Jersey.
That's my home state.
Right.
Let's look multifamily in Jersey. Here we got 5 units.
Okay, 5 unit. 5 units.
They're asking 1.250.
1.250 million. What's the average rent?
It's at an 8.3 cap,
8.3 cap.
250 a door. Built 1910, very old, over 100 years old.
250K per door. Guys, 1.25, it's not even the exit price, okay?
Let's see the income.
What's the income on that? So they're asking 250 a door. What's the average income, Joy?
So first, okay, so this is a mix of residential and the retails on the storefront on the bottom.
Right.
The first floor is making $4K per month, triple net lease, $3,000 base rent. Average rent looks to be around $1,500 to $1,650.
$1,500 rent.
Their projected rent. The projected
The
rent.
projected, so you
Projected
want me to
rent.
pay, I'm paying the seller right now, projected income, yes?
That's what they're saying here.
Okay, so what's the average rent now? Okay,
So,
that's the
yeah, it
projected.
just shows an overview of what their
Projected
projected pro
rent,
forma is.
1,500 to 1,600, okay? That's projected rent. This should go for about 1% rule, 150, 160, maybe 170 a door. Okay, how many units is that?
It's 5 units with a commercial space.
Even
in the front.
200, even 200,000 per door, that 200,000 a door, right? Okay? Times 5, 1 million. Guys, that's your exit price. This is really important, pay attention. Why? Sellers charge me money for projected rent. Why am I stupid? Why am I going to pay for something? I'm going to work right now. I'm going to work for free for the next 2 years to get to this level, okay? Maybe I can get my rent up, and then the property is worth $1 million. How much are you asking?
1.250.
1.250 ask, okay? Folks, 1.250 asking price. My take on this, $1 million is my exit price to get out to make profit. So this should go for 750 max, no more. 700, 750.
But some people might look at the cap rate and be like, well,
Forget about the cap rate, that's
8.3%.
wrong. That 8.3 cap rate, 8.3 cap rate, I'm willing to bet money on it, okay? This is wrong. No way. There's no way. This, at best case scenario, is 5 cap. Let me explain why, okay? When you do your numbers, there's income and there is expense, okay? Whatever seller represent in the expenses, I don't care, I'm not interested. I'm interested to know what's the expense gonna be once I take over the property. That should be sell, whatever his expenses are. So when I take over the property, my expense is going to be much higher, and we have to go real live. We have to give an example. Why, Joey? The 5 units is very small. 5 unit is too small to. It's too expensive. Give me another one, sir.
Okay, let's look at another deal.
Oh shit! What happened here? Yeah.
There you go. This is in Newark, 1.7 million, 15 units.
Okay, 15 units. I like 15 units.
And you're at 113 a door.
Newark, right?
Newark.
113 a door, right?
Yep.
Okay, this is conversation. Okay.
Very old, 1900 build.
So this thing I can get over. See, our property mostly in Florida, other parts of the country too, but not New York, New Jersey. New York and New Jersey, 1900, 1910, 1920. I can't get over it. It's way too old. I can't even forget about the plumbing issue. Plumbing freezes, very cold over there. It's very, very old, 1900 construction.
Seems to be like a vacant building the way they're selling. It says, as is, selling, freedom to design and build according to your goals, whether you're a developer, investor,
So this is for a developer asking how much?
They're asking
This is not a good example. It's development play.
This is a development plan.
I want to show the audience a real life example. And guys, this week we're going to analyze the property, $90 million property with a 20. I'm going to show you how you can make $25 million on the property.
Yeah,
So that's down the road this week.
7 units,
Right.
1.4 million.
7 unit.
Mm-hmm.
7 units.
1.4 million.
1.4 million.
Which comes out to 205 a door.
By the way, we're going to take question and answer in a few minutes, right? 12:30.
12:30, about 10 minutes. Yeah.
Yeah. 205 a door.
205 a door. At 6.35 cap.
6.35 cap.
That they're asking.
Okay, 7 unit. Okay, 205 a door. Where is it again?
This is in Bayonne.
Beyond New Jersey. Okay, so what's the average rent?
It's saying that their NOI is
I
91,000.
don't care about the NOI. Guys, let me stress, I cannot stress this enough. Don't give me NOI, don't give me the net operating income, give me the income. Because a seller can put 10% expense. I've seen 10% expenses, 15% expenses, bad. So never give me NOI, I need to see the income.
Average rent is 1650.
1650 average rent?
And they're saying the market is a little above 2,000.
Okay.
So there's about a $350 upside.
Here's the problem, okay? What's the average rent?
1650.
What's the 1% rule? 165 a door.
165.
And I'm paying 205. What's my performer?
2,000.
Okay, so basically the seller wants me to pay for his upside. Again, another example. That's why small units are very complicated and you can make money. I'm basically paying for the seller. I'm paying for the seller. I'm paying 205 a door, okay, to achieve rent of $2,000 a month, okay. That's my sell price after the upside. So we didn't do anything. Unless you tell me, Joey, I can get $2,500, this deal is too expensive. And if they ask, what's the average rent right now?
Average rent?
Yeah.
1650.
Times 7?
1650 times 7. 11,550.
1.1?
11,550 times 12?
No, yeah, no.
What's up per month?
Per month, times 12?
Yeah, 1650 times 12. No, do it again. 1650 times
No.
7 units.
Right, 7
times
right.
12.
Right.
138,000.
Correct. But no, they ask 1.4 million, okay, for 7 units. How much is that per door?
205.
Thank you. We think it's 165 a door.
Correct.
Times 7.
165 a door times 7. 1,150,000.
Yeah, that's your price.
That's your
1,150,000. That's the ones they're going to pay for it, with the idea to take it to the next level. So that's not bad. $1.4 million. You can offer them now. You can offer them 1.150.
And let's say you got the deal done at 1.150, right?
Right.
What's the exit?
The exit is going
What's
to be
the exit strategy?
The exit strategy is to raise the rent for $2,000 a month, right?
Right.
2,000 times 7.
2,000
1.4
times 7.
$1.4 million.
Yeah.
1.4 minus 150. That's your upside, 250. But you can't pay. Here's the problem: those sellers, okay. And by the way, I'm a seller too, right? But I understand about value. And when we sell property, even though we charge top, we always try to leave some meat in the bone. Over here, there's no meat in the bone because basically the seller say to you, yeah, you can go up to $2,000, but I'm charging you already that price. So I'm charging you, you're paying for the property like it's already making $2,000 a month. Don't like, no good. You have another example?
You want to go bigger or you want to go small?
Bigger, yeah.
Go big, like over 100 units?
Yeah. Well, here's the problem, Joey. A lot of our audience, okay, they can't start with 100 units.
Mm-hmm.
So that's going to be another show, another conversation, because I don't want you guys to overpay. I'd rather you wait until you have the money and just keep saving the money. Keep saving money up. Because to overpay for something small, now you want to get rid of it, it's going to be tough, you're going to lose money. My job is for you not to lose money. Yes, sir.
Yeah, so I'm looking I'm looking in Arizona.
Right.
See if we find anything good there.
Arizona.
I'm trying to look for a large deal. I see 9 units, 3 units, 8 units, 6 units.
Anything in Florida?
8 units, 80 units.
80 units.
Let's start with 80 units, 16,500,000.
Very good.
Right?
Okay, we have 80 units right now. 80 units. How much they're asking?
16.5 mil.
16.5 mil. How much is that per door?
205.
What's the average rent?
Average rent is, so built 1986.
1986. I like it.
It looks like they're hiding the income.
Yeah,
Yeah, they're hiding the income.
hiding the income?
Yeah. Let's see if I can look at their marketing brochure.
What is 2 bedroom, 3 bedroom?
These are here we go. Found the rent. Then we got 40 units or 1 bedroom, 1 bathroom, 40 units. So 50% are ones, 50% are twos.
40. What's the average rent?
Average rent, a little over $1,430 a month.
Another perfect situation, Joey. $1,400, $1,500 average rent. That's for the price. It's worth $150 a door. 150 times 80 is how much?
150 times 80. 12 million. So
There you go.
4.5 million less than what they're asking.
This 16.5 million, yeah, that's your exit price. Seller is charging you money like he already improved the property and is already achieving this rent. Cannot do that. It's like me paying for that. You know the property we talk about in North Florida?
Right.
250 units, okay? 250 units. We're paying 96 a door. $1,000 average rent, right? By the way, the broker keeps sending me messages. We're gonna go into contract. Okay,
Right.
$1,000 a door. Okay, imagine if I'm not paying here future. Why? Because if I did, that will be how much? 125 a door.
On 250, right?
Yeah.
125 a door. 250. 31, 250.
32, call it. Okay.
32.
If I pay $32 million, I'm paying for the upside. I'm not paying 32. I'm paying 24 million. Okay. 24 million. This is a classic example where The seller leave you meat in the bone because right, you're paying lower basis to go up because you're going to increase the rent, then you're going to be able to get a higher price, but it's not charging you. The seller is not charging you for the higher rent because he did not achieve the higher rent yet. However, the smaller property, right? So, excuse me. The smaller property, I don't know why, but the seller, they think they can charge you for future. They charge like they already achieve the new rent. Not so. Joey, are we able to take some phone call?
Yeah, we can see if we can take some questions. I mean,
Any
we
question?
technically have 4 minutes. We can start early.
You
if
can
want.
start now. You can start.
Yeah, we can start right now with questions. Yeah. Anybody wants to come in live to join in? We're only taking calls for video calls. So anybody wants to have their question, we're taking the calls for
You
video
guys
calls.
have another question, you message me privately, and I always tell you, come live on my show. Hi, how are you? We can hear.
From Germany, my friend.
How you
Can
doing?
you hear me?
Yes.
I'm great.
Excellent.
Thank you for your content. I have two questions.
Please.
Yeah?
Yeah.
One, I am very lucky in the sense that my parents already are in the real estate business.
Very
you know?
lucky. Very lucky.
In a sense, they amassed your level of wealth. So now the question is, how do we transfer? Obviously, Germany is a very tax-prone state. We have a lot of tax for inheritance and stuff like that. And so the question right now, what I want to ask you is, how would you structure it? Obviously, you said you're a big fan of refinancing. Would you refinance so that the book value is zero and then gift it over? Or would you put it into, I don't know, a trust?
So,
alternatively, obviously, you can also
right.
Holding structures, stuff like that.
Right. Unfortunately, I don't know. I'm not familiar with the law in Germany. I can get back to you on that. But in the United States, okay, and other parts of the world, when you do a refi, you're not really selling the property. You still hold on to the property, and
yeah, I know. But then obviously you have the debt value that goes up and is against the book value of the asset. No, so practically on paper it should be worth nothing.
No, why? But one second, if you improve the property and the income went up, okay, your value, it should appraise higher, yes?
Yeah, I mean, but on your personal balance sheet, if you have the higher value, but now you refinance 100%, then you get, I don't know, you value the property at 31 million, you refinance, get 31 cash, and then you pay that back.
Right.
Then on my book, on day zero, the book value of my asset is against the liability of 31 million.
Correct.
No?
Correct. But you have to show your book going to show the new basis. Does that make sense?
Exactly. And then exactly. That's what I mean.
Right.
And then on that basis, if I get gifted the asset which goes against the loan, obviously, then it should be zero, right?
Correct. Because you gifted it.
Okay.
But again,
Exactly.
forgive me, I'm not so familiar with the law in Germany, but
Yeah.
more or less, yes.
But how do you structure that? I mean,
We don't know.
You're
The way
a good-looking man. How do you give your kids then the wealth you have amassed?
Well, my kid's gonna have to earn it.
Okay.
Okay. You know what? They ask I don't know if you know what's his name, Shaquille O'Neal. Okay, he told him, "Daddy, we are very rich." Said, no.
Yeah.
I'm very rich. You're not rich.
I'm rich. Yeah. Yes, you have to earn it.
Why you have to own it? After all, it's all for our kids, right?
Exactly. That's what my parents say too. I mean, we have
Right.
enough, so everything plus it's just for you guys.
Hey, take advantage
then
of it. Your
obviously,
parents,
if you work,
you're very lucky. Take advantage of it. Yeah.
yeah, of
Big
course.
good boy,
But
listen
if
to them.
work
Okay,
hard,
listen. You're on it.
If you work hard, obviously you don't want to give a lot to the state.
Right.
You know, the state does nothing for you.
Nothing.
Why would
Nothing.
you?
Zero. Nothing. But
And
unfortunately,
in Germany, it's much
too.
worse.
Really?
In Germany, it's much worse because here you have a lot of pro-tenant laws, which are stupid. You know, go to Berlin, you can't even invest into Berlin. You have Milieuschutz, where basically you can't even renovate.
Well, that's a
because
problem,
if you
right.
renovate, then you.
You got to win. Yeah,
It's a
those people.
socialist state.
That's a problem. They rely on the government. When that happens, okay, they need to keep the same government so they can get paid. Yes, every month they're getting paycheck
Yeah,
without
exactly.
going to work.
Yeah. And do you invest into Israel also? Because I feel like that's a very interesting market.
We don't know. Most
I
of
have
our
family back there.
But most of our investments are in US.
Okay.
Okay.
Then can I ask one last very short question?
Yes.
You always talk about price per door. Do you look at potential cap rates also, where you say cap rate now is not that important, but if I do this and this, then I get this cap rate. So basically looking into return.
So I give you an example, okay?
Yes.
Okay? We purchased recently 312 units in Gainesville, right? And I paid 110 per door, right? Per door, okay?
Yeah.
And the cap rate was maybe 3.5, okay?
Okay.
Why did I pay such a low cap rate? I tell you why. Because my price, see 110 per door, my camp's 180, 190 a door. Can I lose money?
Okay.
Can I lose money?
Not really, no.
Thank you.
No.
Now, here's another example, okay? Let's say the same property, 312 unit, the same property, right? And I'm paying 160 a door, okay? And it's a 6 cap, okay? Am I making money here?
But that means you earn your cash by flipping, right? You don't hold.
Right, exactly. But here's another example. Let's say the same property, I'm paying 160 though, 6 cap. And the average is 170, maybe 170, 180. It's the average. In other words, there's no upside. Where's my upside? Yes, I have a nice cap rate, but I'm not looking to make 6%, 7% of the money. I need to make about at least double the money. My lifestyle is too rich. You know, I'm too spoiled. You know, I want to have the good life, like everybody else. That's my job.
I saw your Rolls Royce.
No, thank you. It's just one of them. But, you know, that's why. You see this next level. We're trying to teach the people. Okay?
Next level.
Got to be next level. You can't. It's a mindset.
Okay, but Eyal, if your business is flipping, how come you say refinance? Because if you refinance, you can't flip. You keep the house.
I tell you why. Okay. Refi is the best way to go. However, when the market is so strong, sometimes it all depends on market condition. A buyer come to you and offer you, give you an offer, you can refuse. You can say no.
No.
Thank you.
You're not married to your property, right?
Thank you very much.
Thank you.
My
Thank
pleasure.
you, Eyal.
Thank you for watching and keep your support. Really appreciate it.
Yes, from Germany. I have the Eyal fan club here.
We love Europe. Thank you.
We love you, Eyal.
Thank you very much. Thank you. So again, we're talking about next level, guys.
Someone else coming in? Right?
No, not yet.
Okay.
We have somebody coming in?
Yeah, we're trying to get someone on.
Yeah, we're trying to talk about mindset, and I'm trying to change the audience mindset, okay, to think big, think next level. And thinking small, is that bad? No, it's not a bad thing, but it's temporarily. You always have to aim high in life. We never stay still, right?
I guess with his question, you know, he comes from a real estate background, like you said. You know, his family has real estate.
Very lucky, yeah.
And I think you said a really good point that even with your kids, even with your family, you know, you don't want anybody to just be entitled in any way.
They cannot. There's no.
Things over there. Is anybody coming in?
Yeah, but
like you're saying, Shaq was a great example.
Shaq was a great example. So we're rich. No, we're not rich. I'm rich.
Eyal.
מה נשמע? Who's this?
Jackie.
Jackie!
Hey, my friend.
How are we doing?
You?
Long time.
Happy to see you.
Thank you. I was there.
Yes, how are you?
How are you? How are we doing? Good?
No, I was looking your channel yesterday. It's amazing what you're doing. I tell you, amazing.
No, we are trying. Listen, we're trying to pay it forward and show the people, okay, what to do and how to take the net worth or the portfolio to a next level. Because more too often people are, you know, they stay in bubble, you know, they stay in the same thing and they need direction.
Well, I just want to tell you that I'm happy because I always remember you tell me the price is important, the location is important, but the most important is the terms. Remember,
Thank you. We're going to talk about terms. Oh, yeah. Sometimes I overpay for property because I get good terms.
So I want to wish you a lot of success and keep doing good, okay?
Double for you, sir. Thank you.
Thank you.
Bye-bye.
Bye.
comments above.
Okay, we are talking.
If you get any questions from anybody.
Any question? Are we taking messages question or only one live?
No, we're only taking video questions.
We're only taking video
If anybody
question.
has a question, they have to come onto the video.
Anybody has question, you have to come in. Guys, there's no stupid question. Everything related to real estate. So, Joey, we're talking about price and terms, right?
Right.
P, R, price, C, plus terms. Price alone is not it doesn't cut it. Okay, you need to get the terms, because more often than not, okay, you get a deal, and the guy says, you know what, I'll give it to you for less. Joey, sometime we get phone call. Okay, so let's say the value is 50 million. Okay, value. Oh, my friend, you're back. Welcome back.
How are you, my friend?
You can't stay away, can you?
Hey, I got a question for you. I guess one thing I wanted to find out: what kind of expenses are incurred in like maybe a state like Florida versus you might not see in a state where it's like in the north, where there's like where we have winter.
So no, in the all right. So when you have winters, you have heating expense, right? Who's paying for the heating? You or the tenant?
Yeah, like we have heat over here. I'm saying like in New Jersey we have heat, we have snow removal. Is there any kind of expense in Florida that is different?
Yeah, insurance. Your insurance, for example, is much cheaper than Florida. Yes.
I would assume so. Yes.
For example, how many units? What do you have? 50 units? 30 units? Was that?
Excuse me?
I forgot how many units. Yeah, how many units do you own?
We own about 100.
How much you pay? What's the average price per door for insurance?
Average door, I would say about $1,800.
How much?
1,800.
That much for, huh?
Yeah, you notice it's not 100 units. I have 2 families, 3 families, everything. You know, it's broken down different.
So the insurance in South Florida, it varies anywhere from 1,500 to 4,000 per door. Crazy, right?
Wow. Okay.
Yeah.
Yeah, about northern Florida.
So what?
That's southern Florida.
Yeah, southern Florida is more, but as you go more north, you have less. You pay less insurance, and then real estate taxes. You have the typical real estate. You have the utility. You have maintenance, repair. You actually have less. You don't have.
What about like air conditioning units?
So you want to make sure that it's separate utility, so the tenant pay for it.
Okay. No, I'm saying, what about the units themselves? Going into these old buildings, are you expecting like a unit to last 10, 15 years?
I have units that
like
last.
Over here with a boiler, what time?
Right. I have AC unit that lasts from 1 year to 30 years. So it's all don't ask me how. So we are the only. Our job, as landlord, we have to maintain it, and we have to replace it as needed. But we don't pay the AC. We don't pay the electric. Tenant pay their own electric.
And do you have to supply like any kind of heat in some of those?
No,
you have, like,
no.
electric heat
Actually,
just in case?
it is. It's a condition and become heater too.
Oh, so it's like a split duct unit?
Yes.
Heat pump type thing?
Yes.
Okay. All right, perfect. All right, thank you, sir.
Most of the time. Thank you for coming. Thank you for your support. Really, very much appreciated. Thank you.
You're the best, my friend. You're the
Spread
best.
the word. Thank you.
Thank you.
So, Joey, we're talking about price and terms, okay? So the other day I was approached by a gentleman, $50 million value, okay? Value, right? Mm-hmm. So I tell you what, I'll give it to you for $40 million, okay? I want $1 million non-refundable. Non-refundable, right? From day one. What do? In other words, I know the property was for $50 million. I'm gonna pay for it now $40 million, with the idea at $50 million I'll make money. Imagine at 40, can you make money in 40? Absolutely. But the guy wants $1 million non-refundable wire to his account immediately. So this type of thing, that's high risk. I don't recommend it for the people. I rather you pay 50, sorry? I rather you pay $50 million, okay, and don't take that risk of putting non-refundable money because you want to make sure you can close on it. My job is to make sure that nobody loses money with me. Here's another example, okay? So suppose the property is 50, anybody else coming in? Not yet.
Trying to get someone.
Before I get to my another example.
This seems like his connection isn't allowing the join. So we're trying other people. I would say baby Dale, tell him to rejoin.
Rejoin.
Doesn't want that?
Joey,
No?
$50 million property, okay? Value, right?
Right.
At $50 million, I have to put down 25%, okay? How much is that? $7.5 million. Don't bother. Oh, excuse me. 12.5 million, okay? Down payment, okay? However, I'm gonna give now. Wait, Joey, I'm gonna give a $55 million offer, okay? Why am I going up?
You might get good terms with him.
Exactly. I'm gonna ask the seller. You know what? I gave you $55 million, okay, with 10% down. Down, okay? What's my down payment now?
5.5.
Thank you very much. What's better, 5.5 or 12.5?
Well, your cash out of pocket's a lot less, so you're $7.5 million less.
Guess what?
Less.
I can take the balance by another property. So in this case, you see, look, 55 or 50. I'm gonna pay an extra $5 million because I get better terms. And by the way, most people don't understand that. They don't get why it's better because right now, because of this method, I'm gonna buy another $50 million property because I have the extra cash. I did not put $12.5 million.
So let me ask you a question on that. So if you gave it, let's say $50 million is their asking price. Oh, you got someone coming in. Yeah, we'll hold this on. Put this on hold.
How are you?
Hi, good. Who's this?
My name is Jonathan. Basically, I wanted to ask you about the 1% per door rule. I mean, I do value add multifamily in New York City, Brooklyn. We're actually looking to get into Florida, so I'll ask you about that next.
Right.
But I mean, the way we do it is just put in, if it's a light value add, then we put in our hard costs and soft costs of what we can get pro forma. And then if it's a gut, then obviously it's pretty much double of what we're going to put. So we don't use the 1% per door rule.
Right.
We just put in, what we think we need to, up the value and account for the 4 months that we'll be renovating and then charge pro forma rents post renovation.
Right. So what's the question?
So I want to understand your 1% rule. I don't calculate it through per door like that.
Well, for example, okay. So right. Give me an example. How many units you guys bought recently?
I'll give you an example. We're buying at, let's say we're buying at a 6 cap, and it's 20 units.
20 units. Okay.
Multifamily. And we're getting right now in place rents. Let's say 1 bed, 1 bath. It's 3,500. We're putting in 45,000. Let's say all the units are free market, no rent stabilized. We're putting in 45,000 in hard costs, 5,000 in soft costs for each unit.
So that.
And then we think post we can get 4,500.
So right now you're getting 3,500. How much you pay for the per door?
We're paying. So we're putting in almost 50,000 in renovation for each door.
Per door per unit. Yeah, but $1 million bucks.
Unit, yeah.
$1 million bucks you put it in, right?
What?
20 units, right?
Yeah.
Times 50 is 1 million, right? Excuse me. Yeah, $1 million. So what is the how much you paying for the property?
I mean, I don't have income. I don't have income. Giving you just an example. Like I can pull up a real world example if you want, but I'm just giving you just one off the top of my head.
Here's my question: 20 unit, average rent $3,500. I was just wondering for the 20 unit, what do you pay for it? How much is 20 times 35?
35?
It's 3,500 times.
500. You mean the 1% rule?
Yeah.
Divided by 1%.
The 1% rule before, just an example. Sorry.
70? No, it's 350 a door.
Right, 350 a door. You pay about 350 a door.
Divided by 1.
Sorry, I didn't get your name. I don't know if you can hear me.
His name is Jonathan.
Jonathan. I think there's connection.
Connection is this loading. I think it's a bad connection.
You hear me?
Yeah, I can hear you. Yeah. You pay about $350 a door?
Yeah. What do you mean? What does that mean? 350? Like that's not how we would do it. Like
So-
that's not how. I'm asking you what you mean by
1%
paying.
of the purchase price should be the rent per month. Does that make sense?
But you're saying that's post. That's what you want to charge post.
Right now, no.
Renovation?
Before at closing.
Okay.
In other words, if your rent gonna be how much at the end of the day? The 4,500?
If it's free market and we're putting in 50,000, depending on where it could be, we could raise it to 4,500. We could raise it to 5,000. Some free market rents in New York City are very low because the landlord bought it 40 years ago, and they haven't done any renovation because they don't have any mortgage on it.
So
the problem is that a lot of the units are rent stabilized, so then the value doesn't go much up because
Exactly.
if it's too rent stabilized, then we really can't. Obviously, we're not going to touch it. And just from the free market units, we won't be able to up the value. That's the problem in New York City.
Right.
So it's got to be like 70% free market.
So my question is, what's your end goal? Refi or keep it or sell it?
No, we're raising a lot of money, so we're exiting in 3 years. We want to stabilize. It. Rent it all out, pro forma, to what we want, and then we're gonna sell it.
For how much per door?
So we want to raise it to the rents that we project.
Right. Which is
I don't do it per door. We raise it based on what we're projecting.
That's
so
fine.
We
20 units.
take
Forget about per door, but you have 20 units. How much you want to sell for? How much you buying? What's the exit? What's the in price? What's the exit price?
Can I give you a real world example?
Please.
Okay, I'll give you a real world example. And then in the meanwhile, if we want to move to Florida, we want to do multifamily as well. Which markets in Florida would you go into? Like South Florida?
Right.
Or,
so you're looking for how many units in Florida? 20 units, 10 units?
it could be, it doesn't matter. We could go up to $100 million.
Right. Central Florida to North Florida. That's my take. Maybe Broward, but it's got to be very careful. But yeah. The problem with South Florida, the insurance can go as much as 3,000 or 4,000 a unit.
Oh yeah, we're doing around like 1,200 per unit. That's what we underwrite it at.
Where in New York?
Yeah, I don't know what that guy, whoever was saying 1,800. That's definitely not what it is per unit. I mean, we're doing it in New York, but that seemed expensive to me.
Right. So give me an example of a good deal. You think it's a good deal in New Jersey?
Okay, so this is a 29-unit building.
29 units, okay.
There's 3 commercial spaces.
Okay.
26 residential. But they're basically, I mean, because it's New York City, we have 14 of the units are free market.
Wow, okay. 14 free market. Free. Okay.
The rest are rent stabilized and rent controlled, but the kicker is that right now for the 1-beds, we're getting some of the units we're getting 1875, 2325, and post renovation. So call it 2,000 for the 1-bed. It's all 1-bed, 1-bath.
2,000.
Post renovation.
Go ahead.
Post renovation. If we're putting in $45,000 into each unit, we're projecting that we can rent it out for $4,000 a month.
4,000 a month. Got it. That's for the 1-bedroom, right?
Sorry?
For one bedroom or for average?
What?
Average for the 1-bedroom.
Average for 1-bed. It's all 1-bed, 1-bath.
I understood.
That's what we're projecting. The problem is the rent stabilized units. Obviously, we're not putting in any work, so we'll put in $5,000. Maybe for the appliances to keep some of the tenants happy. Other than that, we can't increase the value.
How much can it go
the only
up?
value
2%,
here is for
3%?
free market units. Sorry?
With the rent control, rent stabilized, how much can it go up? 2%?
Almost. Yeah, it's really basically nothing.
That's gonna go
The only
another show.
reason we would buy a building like this is because
Next week.
the opportunity of the free market unit is so high that even with that rent stabilized unit,
It's making up for the balance.
we can still. So I'll give you the numbers. So basically, right now the in place NOI
What's the income?
is 700. Well, I'm accounting. It's 709,955 at 100% occupancy.
17. What? NOI
Yeah,
or income?
the NOI.
NOI. So if you want that's right now or that's future?
No, right now.
Right now. So how much you pay for the property?
This is where we see it. They're asking 21,250,000. Okay, and that's literally at like a 3.34 cap. We see it as going in at a 4.09 cap at 17,350,000, and we're selling it at a 5.5 cap in 3 years.
Man,
And then
wow.
that gets us to a 20% IRR and 7% return on unlevered costs.
Yeah, asking
9%
price way
cash
too
on
much.
cash.
Right. Asking price way too much.
Yeah, so we underwrote it at 17,350,000. We're not paying 21.
And even that, what's the cap of that? That's 4.5 cap.
It's 409.
Wow, 4 cap rate.
Well,
Wait. What is it? Brooklyn?
no, it's in the city.
City. Well,
No. This one's in Brooklyn. Yeah, Park
yeah.
Slope.
So Park Slope, yeah, that's a great location. If you like, 3 years, I mean that's a long time for us. In Florida, we're in and out with the refi.
So this is the thing. The reason why the cap rate is so low is because one of the tenants is Bank of America.
Right.
And what happened was during COVID, they were paying $75,000. And obviously during COVID, things were tough. So their rent, they were able to do something where now it's only $33,000 that they're paying.
Right.
But the legal rents are $75,000. So that's why the cap rate is so low, because we're not getting much from Bank of America.
Very low.
So
very
post
low.
sale, right? If we're selling in 3 years and then we can up the value from all the free market units, and then Bank of America we're gonna have to renew, and now you're gonna get double, right? Then obviously the cap rate's gonna go up a lot, and then that's where we see the value here.
I
That
feel
Bank of
like
America's lease is gonna go up a lot.
I feel like it's my opinion, it's 5 cap rate deal all day long. What's 710
5 cap exit?
No.
You're saying you're 5 cap to buy.
Buy. What's 710 or 5, Joey?
What's what?
710 divided by 5.
14.2.
That's the price for it. 14 under, 15 under, no more. That's my opinion.
Yeah, no, we agree. We probably aren't going to pursue it. The only thing would be the Bank of America to see if we can unlock.
Right.
We can figure that out. But I mean, that's the problem with New York City. But a lot of these, there's definitely opportunity. I mean, in 5 years we've bought 85 buildings and we're growing now. So I mean, we want to go see other markets, but there's opportunity because a lot of these guys bought.
Right.
Huh?
Right. You have to come to Florida.
A lot of these. Where in Florida do you say?
Listen, how much cash you put in for this deal? How much cash you putting down?
What are we under right now? We put down like 30%.
Which is how much?
I'm gonna get a calculator. Like what?
I'm gonna show you right now. In Florida, you're gonna put down 7 million to get back 14. Is that good?
Show me.
I'm telling you, I have one right now.
Huh?
I have a deal right now. How much putting down over here?
Let me get 1 second.
We can talk off market, off the show, but I have a deal right now for you. I'm working on a deal. Right.
Then we'll co-GP with you guys if you want.
Take a look. Yeah, just an example. What do you make? How much you put in this deal? Wait, 25, 17, 25%. How much is that? 17.
We're gonna put down 30% of this deal.
So, which is how much?
Let's say 5.2. Let's say we put down 5.2.
So I
We
right
buy
now,
it for 17.3.
I have a deal right now. I'm gonna put down 7 million to make back 14 million. Okay, not in 3 years. I don't have 3 years. I'm a greedy son of a bitch. Okay, I don't have 3 years. Okay, I would say 16 months, 16 to 18 months max. $14 million.
Well, you're not putting in that much. You're not renovating the units that
I am
much. though.
renovating units.
How
I
much
work
are you
fast,
putting
fast,
in
fast.
per unit?
What's that?
What are your hard costs per unit that you're putting
$2
in?
million, $2 million max. 8,000 a door.
Okay, we're putting in 45,000 per unit. It's different. It's a different. It's a different. You know, if we're gonna want to charge premium rents in New York City, there's more extensive renovation that we'd have to do than in Florida.
The
That's
problem, the
difference.
premium rent, okay, when when bad economy comes, okay, now you're stuck, you know. We like the working force housing because $1,000, 1,200, 1,300, 1,400, anybody can afford that, you know.
Uh huh.
But if you
Okay,
want,
show me the deal.
what I can show you the deal. Joey, take the information after, okay?
We will for sure.
Thank you.
What was his name?
My name's Jonathan.
Jonathan. All right, Jonathan. Yeah, reach out to us privately. We'll DM.
Thank you.
Yeah.
Guys,
I mean, do you guys code GP though? Would you?
Yeah,
Would you do that?
we do everything. We do everything. Yeah. Yeah. Guys, we got 3 more minutes.
Yep. Anybody wants to call with more questions?
We got 3 more minutes.
Okay, I'll reach out. I'll reach out
Thank
to
you,
you
sir. Thank
on
you,
my
John.
other
Thank
account.
you. Thank you.
Thank you.
Anybody else want to call in with a question? We're only taking video questions. We have a couple more minutes. Anybody want to call in with a live question? Please call in.
Yeah. You know what? Rent control, okay? Rent control, okay? Actually, it doesn't exist anymore. Right now, you have what they call rent stabilized, okay? Rent. Right, Joey?
Right.
Rent stabilized. Rent stabilized. Guys, I hate it, okay? I don't like the idea if I cannot raise rent. Why am I working for free? And by the way, you know, even if the gentleman was talking about a mixed idea, raising rent, some you can raise rent, some you cannot. The problem is, yeah, you bring a different kind of clientele. And how do you mix it? $4,500 a month, it's different clientele, they're paying $1,500 a month. I don't like rent control. I don't like this idea I can raise rent, okay? That's why we stick to Florida, Texas, and other places where there is no restriction on the landlord. Okay. Joey, do you have anybody?
We're waiting for someone to come on with a video question. We're only taking video questions because last time we had too many questions to answer with typing. So
Video question, it's free, guys. Free information. Free information.
We'll let you in. Please request to join.
It's got Joy. You took me off.
Hey guys, if anybody wants to join, please
Well, if not,
request
it's
to
all-
join for the live. You come in and ask your question. We're only taking video questions. You okay?
Okay, guys. We will see you
We
next.
got another minute. Let's
One
wait
more
for
minute.
someone
Got
to come.
somebody else?
Wait for someone to come in, but maybe just before you wrap it all up, you know, talk about the next level and you know what that movement means to you.
Guys, the next level. What do I mean by that? Okay, my job is to take you to the next level, get you out of your comfort zone, and get you into a whole new mindset for a better life. Okay, your mindset going to change with my show because I'm taking you to the next level. I'm removing you from your comfort zone, where let's say you get, I have a triple net lease. I'm picking up check every single month. I go to my mailbox. Okay, I make 6% money, 7%. Okay, that's now what's going to take you to the next level. What's going to take you to the next level? 30% IRR, 40% a year. That's what you have me for. I'm going to make sure you're going to the next level.